Hello everyone, my name is Nitin Nahar. I welcome you all on behalf of JK Shah classes to this CA final RTP May 2024 video. At the inception, let me tell you something about the RTP. The questions designed are really well. Lot of new topics or amended topics have been covered in depth and questions have been framed accordingly. So obviously I would suggest you to completely go through the RTP in full detail. Now let's begin with the RTP. Let's see. First of all questions have been answered based on Finance Act 2023, including significant amendments and notifications issued up to 31st October 2023, which is also your cutoff date for May 2024 exams. Customs law is also up to 31st October 2023. Unless otherwise specified, section number or rule number would be of CGST Act or CGST rules. And finally, the GST rates in the questions are hypothetical, obviously, because you don't have the GST rates in your syllabus. So say suppose a particular GST rate is given, please stick to that particular GST rate. Even if you know the rate which is applicable in real life, please don't apply it, because rates of GST for various goods or services is not part of your syllabus. Now let's enter into case scenario 1. There are totally 2 case scenarios given. One very important aspect whenever you are seeing a case study scenario is go through the questions first, so that you are aware of all the questions. And once you are aware of all the questions, when you are reading the case scenario, after that you will be able to think on those lines and you will be able to answer the case scenario much faster compared to reading it and then going through the questions. So let's see what all they need from us in case scenario 1. Okay, let's have a look at the notes also. Rate of CGST, SGST, IGST will be 9, 9, 18 respectively for both inward and outward supply of goods and services wherever applicable. The amounts given are exclusive of GST good. Opening balance of input tax credit for the relevant period for Dairy Limited, India is nil. Assume that there is no outward or inward supply apart from the aforesaid transactions in the month of April and May. So that means 2 months data is given. We need to be very careful while answering the MCQs. Based on the facts of the case scenario given above, choose the most appropriate answer to question number 1 to 6 below. So totally 6 questions given, 6 in case scenario 1, 6 in case scenario 2, that means 12 questions. Which of the following activities or transactions undertaken by Dairy Limited do not amount to supply? So what is not a supply? Supply of steel in territorial waters, this is a supply. In fact, even without reading the main part, you know this. Computer being used for business purpose given free of cost to unrelated person, we will have to check whether ITC was taken. If ITC was availed, schedule 1. If ITC was not availed, not a schedule 1 transaction. Then supply of paper rolls for printing of question papers to Ford Mount Senior School. Supply of paper rolls, careful, it's not a supply of printing of question paper. Printing of question paper is a service, but supply of paper rolls is a supply of goods, and goods being supplied for whatever purpose, obviously it would be a taxable supply. Even if it was printing service, it would have been a supply, but an exempt supply. So this is also a supply because goods are being supplied. Recovery of bond amount from outgoing managing director, this is not a supply. Not a supply, sir, no. This is surely not a supply. Reason being, CBIC circular has clearly said that recovery of bond amount, where he does not agree to serve the notice period and we take some money from him, that would not be liable to GST. That's not a supply for consideration at all. So fourth one is not a supply, but we are unsure of second one. We will have to see it in the main part of the question. Okay. Then second one, which of the inward supplies received by Dairy Limited in the month of April are taxable under reverse charge? Services received from independent director. Services received from independent director. Obviously, this is taxable under RCM. Accommodation service from Hillwood Hotels. No RCM, obviously. It's a case of forward charge. Services of arbitral tribunal. Yes, this would be covered under RCM. New machine purchased from dealer based in Cochin. This would not be a case of RCM. Salary paid. This is not a supply at all. Forget about whether it would be RCM. So 1 and 3 are RCM cases. So the right answer would be 1 and 3. That means we know this answer even without reading the main part. Okay. Then comes compute total GST payable on outward supply before setting off ITC for the month of April. So April we need to determine outward GST payable. And CSI options are given separately. That means we will have to do the computation separately. Then compute the total ITC admissible to Dairy Limited for April. Again, concentrate, both output and ITC have been made as two questions and both have to be determined by us. Again, CSUT or IGST has to be determined separately. Then, whether GST is applicable on the event organized by Dhoom Events Limited, Karnataka, for Dairy Limited in Dubai, what would be the place of supply in such case? Okay, we'll have to read further. How shall the amount paid towards training expenses of employees of Dairy Limited be treated in the GST law? So training services is given. We'll have to see what kind of training is given. Training services, if it is provided by a supplier who is outside India, section 13 of IGST Act. If the supplier is an Indian supplier, then section 12, and accordingly we'll have to find the place of supply. Okay, so these are the 6 questions which are asked. Now let's go to the main case study scenario. Okay. Dairy Limited India, a registered supplier under GST in the state of Kerala, is engaged in supplying goods or services. Dairy Inc. San Francisco, US is a subsidiary of Dairy Limited. So we have a subsidiary outside India and is engaged in supply of information technology services to customer in US. Okay. Dairy Limited India has undertaken following transactions during the month of April. Notice that we have to also determine output and ITC for the month of April. So all this information will be relevant for our computation. Okay. Supplied large paper rolls. Careful, it's a goods transaction. To Ford Mount School, Bengaluru, Karnataka. Where are we? We are located in Kerala. And where are we supplying these goods to? We are supplying it to Karnataka for printing of question papers. But we are supplying goods. Careful. We are not doing printing for them. We are supplying goods for the purpose of printing of question papers. As directed by the school, Dairy Limited delivered the paper rolls at a printing press located in Kerala. Yes, people, think. You have delivered the goods in Kerala, but where have you billed it? It's a bill to ship to transaction. In case of bill to ship to transaction 10(1)(b), the place of supply will be principal place of business of the third person on whose direction the goods were delivered to the recipient or any other person. Now here we are billing it to Karnataka. We will have to charge IGST because the place of supply for this will be Karnataka. We are in Kerala. Place of supply is Karnataka 101B, and 15 lakh into 18% would be 2,70,000. CS dash dash. Bond amount recovered from outgoing managing director residing in Kerala of Dhairya Limited since he had left employment before contracted period. This is not a supply. CBIC circular is there dash dash dash. Supplied steel sheets in Indian territorial waters to Dhruvang builders located at a distance of 12 nautical miles from the baseline of Kerala and 15 nautical miles from the baseline of Tamil Nadu. So nearest coastal state. Which is the nearest coastal state? The nearest coastal state is Kerala. So here we will be charging C plus S. So 6 lakh into 9%, 54,000. CGST, 54,000 SGST. Okay. Received an advance for future supply of goods from a customer based in Kerala. No GST in April, because for goods industry we don't consider date of receipt of advance, that is date of receipt of payment is not considered as time of supply because of notification number 66/2017. Received an advance for future supply of services from customer based in Kerala. Obviously, for services, if you receive an advance, should you discharge GST in that month? The answer is yes. And the customer is based in Kerala. So 18% C plus S. So 4,90,000 into 9%, which comes to 44,100. 44,100. Okay. Then computer used for business purpose and on which no ITC has been taken yet, given free of cost to unrelated person based in Kerala. Careful, I have not taken ITC. I have not supplied it to a related person. Not taken ITC, not supplied to a related person. Whether GST will be applicable on this? The answer is no. It is not a supply at all. There is no question of GST. So my output tax will be 2,70,000, 98,100 CGST, 98,100 SGST. I have successfully derived the output tax. Now let's see the balance information. In the balance information, it is possible that something gets added in this. Okay. The company paid sitting fees of 6 lakh to an independent director based in Kerala for attending meeting. Will you get ITC? Yes. Plus this will also be covered under RCM. RCM they have not asked. If you see the question carefully, they have only asked inward supply, RCM, outward supply, GST payable before setting ITC. So they have not asked outward supply plus RCM. So RCM we are not required to compute. There is just a question of whether RCM will apply on this particular transaction. So 6 lakh, will I get ITC? The answer is yes. Director is in Kerala. So 6 lakh into 9% is 54. So 54,000 CGST, 54,000 SGST. Room charges 2,25,000 were paid to Hillwoods Hotel located in Mumbai for stay of CEO of the company for business trip. No ITC. Why, sir? Because Mumbai, Maharashtra supplier, place of supply Maharashtra, he will charge C plus S of Maharashtra, and C plus S of Maharashtra will not be eligible as ITC in the state of Kerala. So you will not get ITC. Company availed services of arbitral tribunal in Cochin, Kerala to settle a business dispute of 7 and paid 7 lakh. Obviously, you'll get ITC. You'll have to also pay tax under reverse charge mechanism 7 lakh. So 7 lakh into 9%, which comes to 63,000 CGST, 63,000 SGST. Okay. Then salary 15 lakh paid to employees, obviously it's not a supply at all because it is covered by negative list. So there is no ITC implication for salary. Company purchased a new machine from a dealer based in Cochin, Kerala for 12 lakh. Depreciation has been claimed under Income Tax Act 1961 on the same, including on all applicable taxes. So you have claimed depreciation on the GST component as well. If you have claimed depreciation on the GST component as well, whether you will be eligible for ITC? The answer is no, you will not get ITC. Okay, let's read further. In the month of May, careful, May, that means we will not consider it in April computation. In the month of May, Dharya Limited sent a team of 25 employees to San Francisco for receiving training in emerging information technology. The training was given by Dharya Inc. USA at its office located in San Francisco. The expenses related to such training was paid by Dharya Limited to Dharya Inc. US. First of all, where is the supplier? The supplier is in US. Where is the recipient? The recipient, sir, is in India. Okay, supplier is in US, recipient is in India. What would be the place of supply for training services? It's a performance based service. 13 subsection 3 of IGST Act clearly states that if the service is performed outside, if the service is a performance based service, then the place of supply will be where the service is performed. Where is the service performed? The service is performed in US. So when the service is performed in US, now supplier is in US, place of supply is in US, whether it will be an import of service? The answer is no. There will be no GST on this because the place of supply is outside India. As the place of supply is outside India, this would not be a taxable transaction. Okay. Further, Dhoom Event Limited, an event management company located and registered in Karnataka, had organized a cultural event. Remember, it's not a business exhibition. Cultural event in the month of May, for again May, so that will not be relevant for our computations, for Dharya Limited in Dubai. Now, even if the event is held outside India, when you are providing service to a registered person, the place of supply will be location of registered person. So place of supply will be Kerala. 10 lakh is being charged. Whether GST will apply? The answer is yes. Even if the event is held outside India, if the service is provided to a registered person, then the place of supply will be location of registered person. In fact, even if you provide it to unregistered person and the event is held outside India, organized, then place of supply will be location of the recipient. Hence, this will be a taxable transaction. Place of supply Kerala. Now let's do the ITC computation. ITC, two things, 54,000, 63,000. It comes to 1,17,000. CGST 1,17,000 SGST. Let's see whether these answers are options in the questions. Okay, first one was, which of the following activities or transactions undertaken by Dharya Limited do not amount to supply? First one was a supply. Computer being used for business purpose, as no ITC is taken, it is not a supply. So 2 is not a supply. 3 was a supply. 4 is not a supply. So the winning answer will be 2 and 4 is not a supply. Always in these cases writing whether it's supply or not supply and then reading the question will always give you the correct answer and will save your time. Then second one we had already answered. Third one, total GST payable 98,100, 98,100, 2,70,000. This is the correct answer. Okay, then ITC admissible will be 1,17,000, 1,17,000. because only for April. Anything related to May, please don't consider it in this. And then you have whether GST is applicable on event organized by Dhoom Events, Karnataka, for Dhairya in Dubai. What would be the place of supply in such cases? Place of supply will be Kerala. So the answer will be B. That is, GST is applicable and the place of supply is Kerala. And then, how shall the amount paid towards training expenses of employees of Dhairya Limited be treated in the GST law? Is GST applicable? The answer is, okay, let's see. No, GST is applicable on the transaction since training was imparted in San Francisco, that is place outside India. This is the correct answer, but let's read the other things as well. GST is applicable on training expenses and IGST is payable by Dhairya Limited since place of supply for services provided to be registered person is location of registered person. No, if it was a section 12 case, then this would have been right. It's a section 13 of IGST where one of them, either the supplier or recipient, is outside India. Okay, then let's see further. Dhairya Inc. USA is required to obtain registration as a CTP in India. No way. Is required to obtain registration as OIDR service provider. No. So the answer will be A. So this was our first case study based question. Okay. Okay. Now let's have a look at case scenario 2. Again, we'll follow the same principle. We'll see the questions first. Okay. Based on the facts of the case scenario given above, choose the most appropriate answer from two questions from 7 to 11. Oh, only 7 to 11. 12th one is not there in this. Total amount of GST payable before setting of ITC by the company including GST payable under RCM. Careful. Notice the difference between the questions. The first case scenario said total outward GST payable. It did not ask me to add RCM liability. But this question is telling me to add GST payable under reverse charge for the month of January for all its locations. And they have given you totals. This is an advantage to us. We don't have to do CSI. We can do a direct computation of the total. Then, in February, after paying all its dues for the month, Rajasthan office wants to transfer certain amounts using form GST PMT09 from its e-cash ledger to e-cash ledger of Orissa office. Can you do it? Yes. For C and I, you can do it. SGST Act even today is not amended. CGST and IGST you can transfer within e-cash ledger of one distinct person to another distinct person under the same PAN. You should have paid all your liabilities, which is already given in the question that we have discharged all the liabilities. Now, it wants to transfer tax minor head under IGST major head amounting to 12 CGST, 12 SGST. So from I tax, you want to transfer to C tax and S tax. C tax will be permitted. S tax at present it's not there in the law. Then from interest minor head under the major head of CGST. Yes, from CGST interest you want to transfer to I interest. This is possible. But from SGST interest to I interest, they have not given flexibility as of now. See, we can argue that from SGST tax we can transfer the money to CGST tax and then transfer CGST tax to IGST. That is a possible argument, but considering the case study scenario given by ICI and the answers given by ICI has not considered that particular part. I will again show you this after reading the entire case study. Then they have asked, balance under all heads of e-cash ledger of Orissa office is nil at that time. The balance of tax under ICS head of e-cash ledger of Orissa office and that of interest of ICS in Rajasthan office. Careful. So one, they are asking what would be the balance of tax in ICS of Orissa and what would be the balance of interest of ICS in Rajasthan. We need to be very careful while reading the case study scenario relating to this point. Then total amount payable to Y including GST as applicable, and they have given you 4 amounts. So when we are computing, we just have to be careful of total amount payable by Y. Okay, then total input tax credit available to the company at pan India level. Pan India level ITC, but they have asked ICS separately. So C and S in some other states, I in those states. I will have to do this entire computation. Pan India basis, they have asked you input tax credit. Then value of supply of services of providing personal guarantee by Mr. Z to Dhan Bank for sanctioning of credit facilities to the company is. Now Mr. Z is giving a personal guarantee. People, this is a CBIC circular saying that personal guarantee given by a director would be a supply, but the open market value of that will be 0 because RBI has said that personal guarantee, there cannot be any amount which is charged for this. As RBI has said that no amount can be charged for this, the open market value of that transaction will be 0. Let's see whether it is there in the option. Nil, as it is not a supply. Nil, services provided by a director to a company is deemed as a supply even without consideration under schedule 1 because director would be considered as a related party. However, since as per RBI guidelines, no consideration can be paid to the director by the company for providing guarantee, open market value of the said supply will be 0. So the answer would be 0. You don't have to do 1%. If it was a corporate guarantee, then the value would be 1% or amount charged, whichever is higher. 10%, no, this is also wrong. So the answer would be B. Now let's go through the main part. We need to be careful of output tax. We need to be careful of RCM now we will have to find together with output tax, plus while taking ITC, we will take ITC CSI wise. Careful, While taking ITC, CSI has to be shown separately in our computation. But while calculating output plus RCM, we can do a direct calculation of the entire amount because totals are given here. Okay. Now let's go to the main part. Okay, let's first read the rates that will help us at any given point of time. All amounts given in the scenario are exclusive of GST good unless otherwise provided. Opening balance of input tax credit of Alpha Cargo Private Limited for the relevant tax periods is nil. GST is payable wherever applicable on all inward and outward supply in the aforesaid case scenario at the following rates unless otherwise specified. Intrastate supply 9, interstate supply 18%. So you'll use 9 and 18%. Let's see. Alpha Cargo Private Limited, a company registered under GST in the states of Rajasthan, is engaged in supplying services of transportation of goods. Oh, that means it's a GTA question. Now GTA, you know that GTA, if he is opting to pay under forward charge, 12% is the rate. But you should not know it because rate of GST is not there in your syllabus. Now the GST rate given in this question is 18. So you will use 18 throughout. Fine, sir. Okay. In addition to its head office registered in Rajasthan, the company also obtained registration in other states where it is operating as a supplier of goods transport service. During the month of January, following transactions were undertaken. Revenue from services of transportation of goods provided to registered persons. Obviously, it is taxable. Sir, but has GTA opted to pay under forward charge? Obviously, we are calculating the output tax. So, underlying assumption would be, there might be a statement also at the end, but underlying assumption would be to calculate output tax, we will have to assume, if nothing is mentioned, that GTA is opting to pay under forward charge. 70 lakh. So on this 70 lakh, will you discharge output? Yes, this will come in output calculation, 70 lakh. I am not multiplying it with 18% because everything is 18. Let's compute everything, then we'll multiply with 18. But we are clear that this will be coming under output. Okay. Then revenue from supply of goods transport services provided to Dhoop Garments registered in Rajasthan for transportation of goods to Japan is 18 lakh 10,000. Even if the goods are going outside India, there used to be a proviso under 12 subsection 8 saying that if the goods are going outside India, then the place of supply will be destination. But that proviso is no more there. So the place of supply, when you provide it to a registered person, would be location of the registered person, and registered person is in Rajasthan, the place of supply will be Rajasthan. So this again will come in output. 18 lakh 10,000 will come in output calculation. Do we need C plus S or I? The answer is no. The company paid rent to local municipal authorities of respective states for its office located in different states. Now we are paying rent to local authorities. We are registered. That means we will have to pay tax under RCM for all this. Plus we will get input. Yes, we will get input. Let's do the total. 75, 25. Total is 1,90,000. So 1,90,000. One, it will come in RCM payable. And RCM payable, do we need out ICS separately? No. Because they have output and RCM, they have asked together one amount. So this will directly come in RCM payable. No need to give a breakup. And it will also come in ITC as C plus S, because every state has to pay RCM of C plus S separately. Every state will have to pay RCM of C plus S. So the ITC which will be available will be C plus Fs of that particular state. And they have asked us pan India basis, so we will just do C plus S. Invoice was issued by local municipality authorities in these states to the offices of the company located in respective states. That means the billing is done in respective states. Our C plus S gets further confirmed with this particular statement. Then there are 5 independent directors, all based in Rajasthan, C plus S transaction, and the sitting fees paid to each such director during the month was 25,000. So 25,000 into 5, 1,25,000. 1,25,000 will come in RCM payable, and we will also get ITC, and the nature of ITC will be C plus S. Okay. Out of these directors, Mr. X, a chartered accountant and an independent director of the company, is also a partner in ABC LLP, chartered accountant firm in Delhi. So ABC LLP Delhi. ABC LLP Delhi provided professional service to the company during the month. LLP has issued an invoice of 1,50,000 for the month of January. So 1,50,000. Will we get ITC? Yes, ITC, and the nature of ITC will be IGST. Agreed? Yes, because the firm is in Delhi. They have issued to the head office. Head office, where is our head office? Head office is in Rajasthan. So the ITC will be IGST. Okay. Another independent director, Mr. Z, on account of his long-term relationship with Alpha Cargo Private Limited, has provided personal guarantee of 1 crore to Dhan Bank for loan taken by the company. During the month of January, he has not charged any commission. Whether GST will apply? No, it's not liable to GST, as open market value will be 0. It's a supply but not liable because open market value will be 0 based on RBI and CBIC circular read together. Then company obtained services of Mr. Y based in Rajasthan, who is providing agency service for payment of annual road tax payable to government for vehicles owned and operated by the company. Mr. Y issued invoice amounting for 10 lakh on the head office. Such amount includes 9 lakh 50,000 as amount of road tax paid on actual basis, and it is indicated separately. So road tax, it will be in the name of the company. This will qualify to be a expense as a pure agent. GST will not apply on 9 lakh 50,000. It is shown separately, indicated separately. Actuals charged, the person who was liable to pay this was the cargo company, and 50,000 as fees. So GST will apply only on 50,000. So 50,000 will come in our ITC calculation. And where is this? Rajasthan. So 50,000 ITC calculation, we will have C plus S. Okay, company also paid an amount of 5 lakh for an event related to goods transport industry in the state of Rajasthan as sponsorship amount. Yeah, sponsorship amount. As for RCM will apply. Will you also get ITC? Yes, this 5 lakh will come in RCM payable, and it will also come in ITC, and ITC, nature of ITC will be C plus S. Then company registered as goods transport agency has opted for payment of GST on goods transport service on forward charge basis. I told you somewhere there might be this assumption or there might be this line saying that it would be covered under forward charge. Even otherwise, if we are computing output ITC, if nothing was mentioned, we would have assumed that they are discharging tax under forward charge. Okay, then in the month of February, see, not Jan, not Jan, we don't have to do an end of Jan calculation because February figures are already given. In the month of February, Rajasthan office of the company has the following balance available in its e-cash ledger. So in tax we have 25, 20, 20, and interest we have 2, 3, 3. So while reading that case study, question of e-cash transfer, we will again see this. Now let's do a computation. See, 70 lakh output, 18 lakh 10,000 again output, then RCM payable 1 lakh 90,000, then 1 lakh 25,000, then RCM payable 5 lakh on sponsorship. So if I total all this, let's total all this. $70 lakh plus 18.1 plus 1.9 plus 1.25 plus 5 lakh comes to 96 lakh 25,000. Now if we multiply this with 18%, because these three are RCM, these two are output, but we want only the final figure. This comes to 17 lakh 32,500. So output plus RCM payable for all the branches would be 17 lakh 32,500. So we got one answer. Now ITC, we need separate answers. ITC, let's do. This is one. This is the other one. This is the third one. And this is the fourth one. So let's start. ITC on rent. Rent ICS. Rent C and S 1,90,000. For each state they will charge C and S. So 1,90,000 into 9%, which comes to 17,100, 17,100. So this is closed. Then 1,25,000 C and S. This is independent director sitting fees. Sitting fees 125 into 9%, which comes to 11,250. 11,250. Then 1.5 lakh IGST. This is from the LLP CA service. 1.5 into 18%, 27,000, but I'm just checking. 27,000 IGST. Then sponsorship, whether you'll get ITC. Yes, sponsorship also you'll get ITC. Sponsorship 5 lakh, that's also within the state. So that would be 45,000 CGST, 45,000 SGST. Now let's total the ITC. 27, 17,100 plus 11,250 plus 45,000. 73,350 and 73,350. Let's see whether this is there in the options. 17,32,500. GST payable before setting of ITC and RCM 17,32,000. Then 8th one we'll do in some time. 9th one we'll see input tax credit. Total input tax credit 77,850 is one option. 73 is not there. So we would have missed something. There is something which we would have missed. Just give me a moment. So we have taken ITC on this 1,25,000. We have taken ITC on this. Okay, got it. 50,000. See, this ITC we have missed. We have written ITC of C and S, but we have not taken it. 50,000 into 18%, 4,500, 4,500. Sometimes now when you are closer to the options, missing a particular detail is possible. 77,850, 77,850. So the final answer would be 27,000 IGST, 77,850, 77,850. So our ITC computation 77,850, 77,850, 27,000 IGST. This would be the answer. Now let's see e-cash ledger. E-cash ledger. Now I have to compute what is the balance in Orissa in tax and Rajasthan interest. First let's see what is the balance available. Tax ICS and interest 233. Let me write it here. So Rajasthan tax is 25,000, 20,000, 20,000. Now you want to transfer from IGST 12,000 to CGST and 12,000 to SGST of Orissa office. See, you want to transfer 12 to CGST head and 12 to SGST head. Can you transfer to CGST head? Yes. So from here you can transfer to CGST head 12,000, but to SGST head you can't. So the balance in Orissa e-cash ledger will be I-12 CGST. SGST transfer cannot be done. Now this is the answer given by ICI, but one more position which can be taken is from this 25 I transfer 24 here, and once it comes in Orissa CGST then from here to here is permissible again by using PMT09. But institute has given an answer that I transfer of S is not directly permissible, don't do it indirectly as well, even if it is permissible by 2 times transfer. So Orissa balance will be dash 12,000 dash. Now interest, Rajasthan interest is 2,000 IGST, CGST 3,000 and SGST 3,000. Now out of this you want to transfer C and S to Orissa. Now the question is, can you do that? C, yes, 3,000 can be transferred. So this will become nil. Do you agree? This will remain 2,000. This will become nil and this will remain 3,000, because again SGST head to another state cannot be done because that SGST belongs to that particular state. You can do it indirectly by doing it twice, but the answer will be 2. In Rajasthan, the balance will be 2, nil and 3,000. So the answer for this tax in Orissa will be nil, 12 and nil. This is ICS. Nothing else is matching. Okay, and interest in Rajasthan 2,000. This is I, because I will remain as it is. You are not transferring anything from I. You want to transfer C 3,000 to I of Orissa. So in Rajasthan, I 2,000 will remain intact. 3,000 of I CGST will get transferred to Orissa. So this becomes 0. And 3,000 of SGST cannot be transferred, so it will remain as it is in Rajasthan. So the answer would be this one. Okay. Then the total amount payable to Mr. Y including GST as applicable. Mr. Y, who was Mr. Y? Mr. Y was this person who paid road tax of 9,50,000. Which we missed in our computation, which I missed in my computation. 9.5 lakh plus 50,000. On that 50,000 he will charge 18% GST, which is 9,000. So the total amount payable to Mr. Y will be 10 lakh 9,000. 9.5 lakh 50,000 plus 9,000. Total comes to 10 lakh 9,000. Let's see. Amount payable to Mr. Y including GST as applicable will be 10 lakh 9,000. And input tax credit we have already computed, which was a very good question. And then we have 11, which we had completed even before reading the main part of case scenario. So this was case scenario 2. Okay, let's now have a look at 12th one. Miss Parvati, an Indian resident who was on a visit to US, returned after 1 year for contesting in assembly elections in her state. So returning after 1 year. She was carrying with her following items: personal effect, no custom duty; laptop, 1 laptop computer, no custom duty. Sir, how do we know more than 18 years? Coming to fight assembly elections in India, people. Jewelry, 25 grams, purchased in US, 67,000. Jewelry, do you remember the limit? 40 grams or 1 lakh, whichever is lower, if you have stayed for more than 1 year. So no custom duty on this as well. Music system, 1,25,000. Out of that you can get a deduction of 50,000, which is a general free allowance. So general free allowance 25,000, balance 75,000. 75,000 into compute custom duty payable by Miss Parvati with reference to baggage rules 2016. Ignore agriculture, infrastructure and development cess. So 35% plus social welfare surcharge comes to 38.5%. So 75,000 into 38.5%, and the answer is 28,875. So the answer comes to 28,875. Clear with this? Okay. Now we are going to enter into a major question, which would be including lot of outward supply as well as inward supply. Let's have a look at question number 13. Okay. Sitaram Industries Limited, and the question is more than one page. So whenever the question is more than one page or more than two page, better you see the GST rate and also see what they want. So rate of CGST, SGST, IGST 9, 18 respectively for both inward and outward supply of goods and services, except special packing boxes for which the applicable GST rates are 6, 6 and 12. So special packing has 6, 6, 12 and normal 9, 9, 18. Okay. All amounts given are exclusive of tax. Very well. From the information given above, you are required to compute the eligible ITC. So once is eligible ITC available for set off, and minimum net GST payable in cash. Oh, that means you have to do input, output minus ITC. And if you have to do output minus ITC, obviously you will calculate ITC eligible. In cash, that is CSI, specifically given, you have to do CNSY. For the month of October 2023, provide brief reasons for the treatment of each item. Notes are mandatory. You don't have an option. You can't not write notes. You have to write the notes. That's mandatory. Now let's see the questions. We will see the first one. Sitaram Industries Limited, a registered entity under GST in the state of Karnataka. So state is important because we'll get to know C, S or I. That becomes really important. Is engaged in manufacture and supply of both taxable and exempt goods. The moment you see taxable and exempt goods, one thing should strike you. E and F. Exempt turnover divided by total turnover. Common credit will be there. Common credit has to be multiplied with E and F. That means for finding E and F, whenever you see a sale transaction, keep mentioning whether it will come in E or it will come in F. That becomes very important. Fine. Following information for the month of October 2023 is provided by it. Outward supply. Sold an old warehouse building in the state of Karnataka to a retail giant in the same state. You had a warehouse, you are in Karnataka, you sold that warehouse for 30 lakh. Is GST applicable? Now, whether it will come in output tax, and I am just mentioning output tax, ICS. No, it will not come in output tax because it is covered by negative list. But will it come in E? Yes, it will come in E and F. Land and building sold will become part of E and F. Stamp duty value. Don't forget that. Don't forget that land and building is valued at stamp duty. Securities are valued at 1% of the sale value. So be careful. Dash 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 in output, but this will come in both E and F, not the sale price but stamp duty value. So somewhere I am sure stamp duty value will be given. Then supplied 30 laptops over the counter to Mr. Sudhakar, an unregistered buyer who took it to his residence in Haryana. So we have supplied 30 laptops. We supplied it here only. He is an unregistered buyer. He took it to Haryana. Invoice issued to him mentions only his name and state. However, his complete address is missing. no problem. If state is there, state is deemed to be the address, plus you will end up charging IGST. You are in Karnataka. If he gives his state name, then you have to charge the tax applicable. Which provision, sir? 10(1) CA. When you supply to unregistered person, if address is available on record, such address. If no address, then location of the supplier. And there is a line that mentioning of the state is deemed to be recording the address. So you'll have to charge IGST. Special boxes for packing of laptops 1,30,000. Tell me, special boxes are incidental or ancillary to the main supply? Correct. Obviously yes, sir. Obviously yes. Which rate will apply? Laptop rate will apply or special packing rate? Laptop rate will be applicable. So entire 13,30,000 we will charge laptop rate 18%. So let's do 13,30,000 into 18%, and this will be a IGST transaction. Why is it a IGST transaction? 10(1) CA, a very important amendment which had happened recently. Be very careful on this particular aspect. So 2,39,000 IGST, C and S dash dash. Okay, this will become part of F. Don't forget that you keep writing E and F wherever applicable, so that when you are doing E and F calculation, it becomes very easy. Then provided direct selling agent services to Kumkum Bank registered in Karnataka. Who are you? Sir, we are a company. Is it covered under RCM? No, because we are a company. Company providing direct selling agent services, forward charge. Only individual direct selling agent is covered by RCM. So 4 lakh we have to charge GST. It's in Karnataka. We'll have to charge C plus S, and this will become F. So 4 lakh will become F. 4 lakh into 9%. I should know it. 36,000. 36,000. Okay. Next one. Provided pure labor service. Pure labor. Pure labor. Pertaining to single residential unit in Mumbai. Oh, bungalow. Otherwise than as part of a complex. For erection and installation of renovation work. Careful. Only original work is exempt. This is not exempt. This will be taxable because it is renovation repair. You don't get it for single residential unit. You get it for Pradhan Mantri Awas Yojana construction. There repair, renovation, everything is covered. But single residential unit you only get for renovation work. That's why in this case 6,20,000 will be taxable at 18%. Let me do the computation. And Maharashtra, so Maharashtra IGST will apply. 6,20,000 into 18% comes to 1,11,600 dash dash in C and S. Clear with this? Yes. So this will be a taxable transaction. That means it will become F. If you make one mistake of making it as exempt, one, output gone. Second, E and F will also go wrong, will not get any marks for full computation. Stepwise marking will always be there, but for full computation will not get any marks. Okay, then let's see the next one. Provided free of cost training in a resort. You are providing free of cost training, supply without consideration, in a resort in Puducherry to its agents based in Karnataka on effective use of product of the company. Tell me, supply without consideration. Is it a permanent transfer of a business asset where ITC was taken? No. Related person, distinct person? No, because it's agents. It's not a sole agent. Sole agent is related person, not agents. Then import of service? No. Principal agent transaction where agent is billing in his name? No, nothing given. Agent. So this, whether GST would be applicable? No. Sir, what if we assume that these agents are billing in their own name? Still GST will not apply because this is a service provided to agent. Principal agent transaction is liable to GST only for the goods part which principal is sending to the agent. Goods being sent from principal to agent is liable, not service. Service will not be covered. You check the summary, you would have clearly written principal agent goods and read the law as well. So this will not be a supply. If it is not a supply, will it become E or F? No. If it is not a supply, there is no question of becoming E or F. So neither in E nor in F. Output dash dash dash. Okay. Interest received on fixed deposits from Sulakshan Bank registered in Karnataka. Will you charge output? No, but this will become part of F. Sir, will it become part of E? Sir, it is exempt now. People, interest received is excluded from E. You remember interest on loans, deposit, advances, except interest earned by banks or financial institution. So for everyone else, interest will be excluded. So it will not form part of E, but it will form part of F, because F will be total turnover. It will be included in F. Fair enough, sir. So is output done? Output to this extent we have completed. If there is any other information, we will add it. Now coming to inward supply. Received a debit note in respect of inward intrastate taxable supplies received in the financial year 2021. So some intrastate supply you had received in 2021 for quantity difference as agreed. These inward supply were used for all goods manufactured in the factory. That means common credit. The moment it is used for everything, I am manufacturing both taxable as well as exempt goods. That means all these are common credit. Date of debit note is 16th October 2023. Now for which month am I doing the calculation? I am doing the calculation for the month of October 23. I received a debit note 16th October 23. Can I avail ITC? The answer is yes, I can avail ITC, because what is relevant for checking whether debit note ITC can be availed is the date of debit note, not the main transaction. See, main transaction you will see time limit to avail ITC separately. For the debit note, you will see the time limit to avail ITC separately. So for this debit note of 16th October, will I get ITC in the month of October? The answer is yes. And remember, I am receiving debit note. So for the person issuing debit note, it would be output. For the person receiving debit note, I will get ITC. I am eligible for ITC. It's an intrastate supply. So I'll get ITC of 4 lakh into, now this is my output. Here my ITC calculation start. 36,000 CGST, 36,000 SGST, and it is common credit, so we will have to do ITC reversal. Solar panels installed in the factory for providing electricity to be used in the factory. Solar panel installed. Institute has taken a stand that this will be block credit because it is for construction of an immovable property and it will not qualify to be plant and machinery. However, a different view can be taken in real life based on circumstances, but for your exams I would obviously tell you to stick to the positions taken by ICI. So solar panel, if ICI is saying ITC is not eligible, block credit, you also treat it as block credit, no ITC would be available for this. Then purchased employee uniforms for 1000 employees. Uniform worth 3 lakh were necessary to ensure safety of the workers while carrying out manufacturing activity. Remaining uniforms of 4 lakh were sometimes worn by employees outside the factory for personal purpose. Will you get ITC for 4 lakh? No. 4 lakh would be block credit. Personal consumption, you will not get ITC for 4 lakh. 3 lakh which is necessary and used completely for business where there is no personal use. 3 lakh interstate supply, you will get ITC. 3 lakh into 18%, 54,000. Correct? Okay. Now let's see. Company provided the following additional information. Sale of old warehouse, stamp duty was paid on 32 lakh. So for the purpose of E and F, this will be 32 lakh. Okay. Company provided a corporate guarantee of 2 crore to Lakshmi Logistics Limited, its related company having registered office in the state of Karnataka for loan availed by the latter from Jan Dhan Bank Limited Karnataka. I am providing a corporate guarantee. I will have to discharge GST. I have not charged any consideration, no information given. 2 crore into 2% value will be 2 lakh. Agreed. So on this 2 lakh I will have to discharge output. So that means I will consider 2 lakh here corporate guarantee. 2 lakh into 18%. Now it's in Karnataka, so bank is also in Karnataka, so 2 lakh into 18%, 18,000 CGST, 18,000 SGST, and this will become part of F, not E, because this is not an exempt supply, but this will be included in F because it's one of my output. Okay, then accountant of the company did not claim ITC in respect of debit note received for the reason that original purchase related to earlier years for which ITC eligibility was over. See, original purchase it is over, but the view of the accountant is incorrect, as debit note you can take ITC based on the date of debit note. Okay, that's it. Oh, that's it, sir. That's it. Now let's start doing the computation. Now 239 plus 111,600. 3,51,000. Then 36 plus 18, 54,000 CGST, 54,000 SGST. So 3,51,000, 54, 54. This is our output. 351, 54, 54. Okay. Then ITC 54,000, 36,000, 36,000. But this ITC we will have to do less reversal. ITC reversal will have to be done, then you will get the net ITC amounts which will be credited. So for reversal we'll have to calculate E by F. Let's calculate E by F. EF, E 32 lakh, I am taking it from here. 32 lakh, 32 lakh. Then this 1330 will come only in F. Then 4 lakh will only come in F. 6 lakh 20 will only come in F. This is not a supply. This 2 lakh corporate guarantee will come only in F. Then interest will also only come in F. So total of E is 32 lakh, and this will be 32 plus 13.3 plus 4 plus 6.2 plus 4, 59.5 lakh. So E 32 lakh, 59.5 lakh, we got our E by F. So reversal will be 54,000 into E by F. E by F is 32 lakh divided by 59.5 lakh. This is for I. We will have to repeat it for all three. So 54,000 into 32 divided by 59.5. This comes to 29,042. Now when we subtract it with 54,000, we get 24,958 as the net ITC. Same way 36,000 into 32 divided by 59.5, 19,361. Same thing will come in SGST as well, no need to do the computation. So we reduce all these reversals. So 36,000 minus 19,361, 16,639, 16,639. Now ICS. So I, we can directly subtract from I. Yes, I, because IGST is much higher, 24,958. C can go against C. 1 minute. C 16,639 and S is also 16,639, and you have to write notes for all this. This is a 14 mark question. So 351 minus 24,958, which comes to 326,042, and then 54,000 minus 16,639, which comes to 37,361. 37,361. It's important to check the answer once, because possible now we missed out one adjustment as we did earlier. So 13th one, 37,361. So the answer for 13th one is 37,361. I remember this number. And then 326,042. Let's check. 326,042, 37,361, 37,361. 326,042, 37,361, 37,361. Clear with this? Yes. So have your approach very clear on this particular question. Okay. Without fail, practice this once. Okay, let's now go to question number 14. Let's see question number 14. Fortune 365 is an online money gaming platform operating from UAE. Doesn't matter, even if they are operating from outside India, take registration in India and discharge GST. New amendment, online money gaming industry. It provides its users a platform to play and win money in different games that are available on its portal. Very good. In the month of December, player A, an unregistered person located in India, deposited an amount of 10,000 including GST. Okay. In the master wallet available on the portal. Now whatever amount you add, that will be regarded as value, and whatever you are withdrawing, no deduction of that is allowed. That is valuation rule 31B, 31C. Careful. Subsequently, the following transactions were undertaken by player A in the said month. Let's first see what they want. Based on the information provided above, answer the following questions providing brief reasons. Compute total GST payable on the aforesaid given transactions. Determine net amount transferred by player A to his bank account after aforesaid transactions. Okay, he is frustrated and he has taken money back. Ascertain whether Fortune 365 is required to obtain registration in India. Will your answer be different if player A is registered in India? First of all, should Fortune 365 register in India? Mandatory. A person providing online money gaming, even if he is providing from outside India, that person has to take registration in India or appoint a representative. That's mandatory. Will your answer change if player A is registered under GST? No, it will not change. Online money gaming doesn't matter whether recipient in India is registered or unregistered. In all cases, online money gaming, the supplier, even if he is outside India, he has to take registration. That would be our answer for third one. Now we need GST payable and net amount which he is going to transfer back. Okay. Let's see. First, he has deposited 10,000 including GST. Let's at all stages. Okay, what's the rate of GST? 28%. Please ignore the bifurcation of CSI. Very good. So 28%. Now what would happen once you deposit 10,000? This is the deposit amount. How much will go towards GST? GST will be 10,000 divided by 128 into 28. GST amount will be 2188. Now net amount remaining in the wallet will be 7812. So I have 7812 in my wallet. Okay, then let's see what I have done. Player A utilized the amount of 2000 from his master wallets towards playing a virtual racing game on the platform. Okay, subtract 2000. He used it for playing a virtual game. While he is using it, whether GST is applicable? No. Only at the time of deposit for online money gaming, when you are depositing, that time GST is applicable. For playing, there is no GST again. As a winning, amount of 10,000 was credited to his wallet. So 10,000 credited. Winning. Whether GST will apply on winning? The answer is no, because it's covered by negative list. Actionable claim. No GST. Then let's go forward. On another portal operated by Fortune 365 in the name of Bet 180, player A placed a bet of face value of 11,000 on an international wrestling match. This is not online money gaming. Betting, whatever is the amount which you bet, on that GST will be applicable. However, he lost the bet and hence bet amount of 11,000 with applicable taxes was transferred from master wallet to bank account of bet. That means you are using 11,000 for bet. This is bet, and for betting the value of supply will be bet amount. Face value of the bet amount is 11,000. GST on bet amount will be 11,000 into 28%. You can't do inclusive for this. No, not permitted, because on the entire face value GST will be charged. 11,000 into 28%, which comes to 3080. So this also we will lose. Okay. Player A transferred the balance amount from his master wallet to his bank account after a aforesaid transaction. Assume all the above transactions are exclusive of GST unless otherwise specified. See, deposit was already mentioned that it is inclusive of GST. Now, if I subtract all this, how much of money does he have now? 7812 minus 2000 plus 10,000 minus 11,000 minus 3080. 1732 is what he will get in bank. So institute is saying don't do all this, because you deposit 10,000 and you get back 1732. And what is the GST? Two GSTs. One is on the deposit amount, 2188. How much has government earned on the bet amount? 3080. So 2188 plus 3080 will be 5,268. This is the total GST on transactions. Be very careful. If you win and keep investing again in the same online money gaming, then GST will not apply. But if you win and use it for some other bet on some other app, then in that case, that's a betting transaction. Betting face value is liable to GST. So a very good question where institute has mixed online money gaming and betting provisions. Really important for your examination. Okay, let's now move on to the next question. Bindusara commences the business of supplying taxable goods locally within the state of Rajasthan in April. He is not yet registered under GST. As his aggregate turnover reaches 8 lakh by the end of the month in June, Bindusara starts exploring the option to sell the goods supplied by him within Rajasthan on a popular e-commerce platform. e-Vastu store by listing the goods on the said platform. So 8 lakh is the turnover, not registered, wants to sell online. This is a new provision based on amendment. This is created. He approaches you for advice on the following issues. Bindusara wishes to continue his business without registering under GST, since it will enhance the compliance burden under GST law. Can he supply goods through e-Vastu store without obtaining GST registration? You are required to advise him. What will be your advice? The answer is yes, you can sell online up to the registration limit without taking GST registration, but you should have a PAN. You should not make any interstate supply. You should have branch only in one state. You should take a enrollment number on the common portal, and once you cross the registration limit, you should take a new registration and surrender the enrollment number. These are the compliances which have to be mentioned in your A part of the answer. So entire thing has to be mentioned. Then discuss the GST implications in case Bindusara supplies goods through e-commerce operator e-Vastu store. So GST implication on Bindusara will be no GST, because obviously he can sell without registering under GST. For the e-commerce platform, they will have to make sure that enrollment number is there, and e-commerce platform has to report this in their GSTR 8, which is TCS return, and they should make sure that there is no TCS on this transaction. Finally, penalty may also apply, but institute has not incorporated the penalty provision in the answer. So it's just that if e-commerce operator does not follow all this and allows the other person to make an interstate supply, or allows a person who is liable to register to sell online, then in that case the e-commerce operator will have to pay a penalty under section 122 1B. But institute has not mentioned it, so you'll just mention about enrollment number, reporting requirement, and no TCS will apply, as the supplier of goods through e-commerce operator is unregistered and he is permitted to sell even if he is unregistered. Clear? Okay, great. Now let's see question number 16. A Limited is registered under GST in Rajasthan, Delhi, Haryana, Punjab. Due to closure of business activities in Rajasthan with effect from May 31st, 2023, A Limited filed an application for cancellation of registration before the jurisdictional tax authorities of Rajasthan. So applied for cancellation. The application for cancellation was filed on 30th June. So within 30 days you have to file it. They filed it within 30 days. You closed it on 31st May. The registration was suspended with immediate effect from 30th June 2023 by the jurisdictional tax authorities. The final order of cancellation was dated 31st July 2023. So effective date of cancellation would be May 31st, 31st July, which is later. Obviously 31st July is later. So okay, one second. You'll have to also check what is the effective date of cancellation in the order. You have closed your business on 31st May, but it depends on the officer as to what is the effective date of cancellation. You are required to advise A Limited regarding last date of filing final return by 8 in Rajasthan. Further, A Limited was also registered as a ISD in Rajasthan. The said registration was cancelled with effect from 30th June 2023 with an order dated 31st July. Anyways, whichever is later, date of cancellation or date of order of cancellation, whichever is later. So 31st July will be the later date. So 31st July plus 3 months time is what you get for filing final return. August, September, October. So you have to file the return, final return by 31st October 2023. So that would be the answer for the first one. They had one ISD registration. Tell me, ISD registration, does it have any stock? No. See, in final return, you basically report the stock. Will ISD registration be required to file final return? The answer is no. Only 3B, 4, 5, which is filed under 39(1), they require filing of final return. Otherwise, final return is not required for TCS, TDS or ISD registrations, because obviously you will not have any kind of stock. Advise whether final return is required to be filed upon cancellation of ISD registration by A Limited. If yes, what is the due date for filing the final return? Final return would not be required to be filed for the ISD registration, but for the regular registration in Rajasthan, you'll have to file a final return, and the time limit is 3 months from the date of cancellation or 3 months from the date of order of cancellation, whichever is later. Okay, let's see the next question. Zebrex, registered in Delhi, enters into a contract with Shine Limited, an advertising company located and registered in Gurugram, Haryana, to arrange the display of an advertisement of Zebrex newly launched product on a hoarding placed in Marine Drive, Mumbai, Maharashtra for initial 3 months of the launch of the product. 1 second. Zebrex entered into a contract with Shine Limited, advertising company. So who is supplier? Shine Limited is the supplier. And where is Shine Limited? Haryana. And where is Zebrex? Zebrex is in Delhi. What is the nature of service? Nature of service is advertising. Correct. So Shine Limited has agreed to provide advertising service to Zebrex in Mumbai, in Marine Drive. Okay. Shine Limited in turn enters into a contract with owner of Seaside Hotel located and registered in Marine Drive, Mumbai, Maharashtra for display of advertisement on hoarding placed in the lawn of the hotel. What will be the place of supply of services provided in the given case? Now, there is a third one, which is Seaside Hotel. Seaside Hotel. Now, the Seaside Hotel is in Mumbai, and this is giving service to Shine Limited. And what is the service? Renting of immovable property, because they are allowing hoarding to be used. Renting of immovable property. Now, this will be a case of section 12(3). The first service is this one. 12(3). Both are in India. Renting of immovable property. 12(3). The place of supply will be Mumbai. And the type of tax will be C+S. But they have not asked type of tax, so you please stick to place of supply being Mumbai. So Mumbai being the place of supply for this transaction 12(3). You will mention what is the type of transaction. You will mention the type of GST. Second is advertising. which is provided by Haryana based company to Delhi. This is a case of 12.2 because this is not related to immovable property. It's an advertisement service. When it is provided to a registered person, the place of supply will be location of registered person, that is Delhi, and you will end up charging IGST. In fact, this is exactly the point which is covered by a CBIC circular, which is covered in the amendment video on the same YouTube channel. So place of supply for first transaction would be Mumbai, place of supply for the second transaction would be Delhi. Clear? Okay, great. Now let's move on to question number 18. Product Hexa was imported by Mr. Narayan by air, careful, 20%. The details of import transactions are as follows. Price of Hexa at exporter's factory 8,000 USD. Freight from factory of the exporter to load airport, that is airport of the exporter country 500. Loading and handling charges at the load airport 500. Freight from load airport to airport of importation, that is outside India to India 4,000. Insurance charges 2,000. Though the aircraft arrived on 24th November, bill of entry was filed on 20th November. Now, what will be the rate? Rate will be whichever is later. You remember, rate of tax is always whichever is later. Bill of entry or arrival, whichever is later. But rate of exchange will be filing of bill of entry. When is the bill of entry filed? Bill of entry is filed on 20th November. CBIC rate will be used and the rate which we will use is 70. You agree with this much? These are important things and basics. Now let's do the computation. So X factory price is 8,000. Transportation and handling 500 and 500, which comes to 1,000. Total 9,000. This becomes your FOB. Now you add air freight. Now air freight, the loss is 20% of FOB, that is 20% of 9,000 or actual. See, and actual will cover everything. Actual will be 5,000. Sir, how is actual 5,000? 4,000 is given now. For all these three are considered as part of 20% computation. So 5,000 versus 20% of 9,000, this comes to 1,800. Now whenever you consider 20%, it is deemed that this transportation and handling is already included in 1,800. As it is already included, we will have to again subtract 1,000, that is transportation and handling, which is already considered as part of air freight, loading, unloading from the exporter's premise till the Indian port. So we'll have to do this subtraction. Sir, can we not consider this and not consider this? That is also fine, but do this 20% on 9,000 and not on 8,000. Just be careful about that. So if you add and then subtract, you will again get the correct answer. Plus then insurance actual is given, you will use actuals, that is 2,000. So total it up, 9,000 plus 1,800 minus 1,000 plus 2,000, which comes to 11,800. Correct? Yes sir. So 11,800 will be regarded as CIF. Now convert it, assessable value in INR will be into 70. Now multiply this 11,800 into 70, which comes to 8,26,000. 8,26,000. Then what do we do, sir? Then you will add basic custom duty at 10%. You will take 10% rate, whichever is later, 82,600. Then you will add SWS. Don't miss SWS. Write a note for that. 8260 until and unless it's mentioned in the question that SWS is ignored. Okay, nothing is mentioned. Okay, we'll again cross verify the answer. Then 8,26,000 plus 82,600 plus 8260, 9,16,860. This will be the value for the purpose of IGST. So IGST at 12%, which is CVD under section 37, will be 1,10,023. So custom duty will be including GST will be B plus C plus D, which comes to 2,08,83. Let's verify the answer and check whether it matches with the answer given by institute. Okay, 2,08,83. So total duty plus tax payable. Will you get ITC? Yes, of the IGST amount you will be eligible for ITC. Clear? So be very strong with the computation questions of customs, because this is easy, plus there might be some adjustments, but you have covered all the adjustments and you should be able to answer it. Okay, last two questions left. Let's see them. Shivans Limited imported a machine from Germany for 180 lakhs during the month of March 2022 on payment of all duties of customs. Due to some technical manufacturing defect, the machine was exported, that is sent back to the supplier for repair in October 22. The machine was re-imported without any remanufacturing or reprocessing in August 2023 after repairs. Since the machine was under warranty period, the repairs were carried out free of cost. Now tell me, you sent a machine back because it was not working. The same machine came back without any remanufacture. Will custom duty apply on the entire machine? No. The custom duty will apply on fair cost of repair plus material plus to and fro freight and insurance. However, the fair cost of repair excluding cost of material of 10 lakh would be 5 lakh. So 10 lakh plus 5 lakh, 15 lakh is the fair cost of repair including material. Actual insurance and freight charges to and from was 5 lakh, that is 2.5 lakh each. So this will also be added. The ownership of the machinery has not been changed during the period. You are required to advise Shivans Limited on the concessions available for importation of machine after repair and also state the conditions to be satisfied for availing such concessions. So you will have to write that machine should be re-imported within 1 year plus extendable, plus there should not be any remanufacture of that machine. Then in that case, the benefit which is available on fair cost of repair and to and fro freight and insurance, GST will apply only on that. Sorry, custom duty will apply only on that. Also compute the custom duty and integrated tax payable, if any, on re-import of the machine. Basic custom duty rate 15%, integrated tax 12%. Ignore agriculture, infrastructure and development cess. Now 20 lakh is the assessable value. Basic custom duty at 15% will be 3 lakh. Social welfare surcharge at 10% will be 30,000. And on now IGST will apply at 12% and this will apply on 23 lakh 30,000. So 23 lakh 30,000 into 12%, which comes to 2,79,600. So custom duty including IGST will be 6,09,600. Let's check the answer and also go through the conditions. Okay. Okay. As per notification 45/2017, duty payable on re-importation of goods which had been exported for repair abroad is the duty of customs which would be leviable if the value of re-imported goods after repair were made up of fair cost of repair carried out including cost of materials used in the repair where such repair are actually incurred or not, insurance, freight charges both ways. However, the following conditions needs to be satisfied. Goods must be re-imported within 3 years plus further extension of 2 years, total being 5 years. Now, though the main provision, that is section, says 1 year, here it would be 3 years. Exported goods and re-imported goods must be same. Obviously they are same. Ownership of the goods should not change. It has not changed because I sent it for repair and I am getting back the same machine. Since all the conditions specified above are fulfilled in the given case, the custom duty payable on re-imported will be computed as follows. Value of goods re-imported after export, cost of material 10 lakh, fair cost of repair 5 lakh, actual freight and insurance 5 lakh. This becomes the value. On this, basic custom duty 3 lakh, social welfare surcharge 30,000, total integrated tax will be 12% on 23 lakh 30, and you add ABC, you'll get 6 lakh 9,600. Okay, now let's see the last one. Okay. Sudhakar Export House, Madhya Pradesh, is engaged in export of goods to various neighboring countries. It is keen on becoming a status holder and is desirous to know the privileges granted. See, they have not asked you how to become a status holder. No, 3 million, 5 million, 5 million, nothing. Privileges under foreign trade policy to various status holders. You are required to discuss the same with reference to FTP. Plain theory question, privileges. What privileges do you get? You get CON on priority basis, exemption from getting the documents from the banks, which is mandatory for other cases. 2-star and above you get export warehouse, then samples can be sent. Then if you are 3-star, 4-star, 5-star, then self-certification is also allowed. You don't have to get it done from outside. These are the 5 points which you can mention. Let's have a look at the answer. Okay. Authorization and custom clearance on self-declaration basis. Fixation of CON on priority basis, that is within 60 days. Exemption from compulsory negotiation of documents through banks. Exemption from furnishing bank guarantee in various schemes. 2-star house and above are permitted to establish export warehouse. Manufacturers who are 3, 4 or 5 will be enabled to self-certify that these goods are originated in India as per industrial entrepreneurship memorandum, industrial license or letter of undertaking as originating from India with a view to qualify for preferential treatment. Status holders shall be eligible to export freely exportable items on free of cost basis for export promotion subject to annual limits. Annual limits institute has not kept in your syllabus, so it would just be this. They also get preferential treatment and priority in handling of the consignments of concerned agencies. Clear? Okay, so this was your RTP. Just one important point which I had to mention based on the amendment video which was released for IDT. Now, section 13.9 deals with transportation of goods, place of supply, and section 12.8 also used to deal with transportation of goods, place of supply. This was when supplier or recipient is outside India, and 12.8 was when supplier and recipient are in India. Now 13.9 is completely deleted, but 12.8, now 12.8, there was a proviso. First, let me write, if the recipient is registered, then location of the registered person. If the recipient is unregistered person, then in that case, the place of supply used to be where the goods are handed over for transportation to the transporter. Now, there used to be a proviso in 12.8 which used to say if the goods are going outside India, then the place of supply will be destination. I have inadvertently mentioned in the amendment video that 12.8 is completely deleted. 12.8 is not completely deleted, only the proviso is deleted. So as only the proviso is deleted, it will not go under the general provisions of 12.2. 12.8 RP URP is even today intact if it is provided to a registered person, location of registered person, if it is provided to unregistered person, where the goods are handed over for further transportation. Handed over does not mean delivery. Handed over means where the goods were given to the courier agency. Now, understand that if the courier agency is in Bangalore, I am going to the courier agency and sending the parcel to Delhi. So I am giving it to the courier agency in Bangalore, place of supply will be Bangalore. Courier agency is in Bangalore, it will charge C plus S. So be very careful on this particular point of 12.8 proviso being deleted. See, 13.9 is completely deleted, but 12 proviso is deleted. The main part of 12.8 even today remains intact. Okay, just make this one note. Wishing you all the best for your examinations. Do very well.